Ladies and gentlemen, good day and welcome to the ORIENTBELL Limited Q4 and FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you, sir.
Good afternoon, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for ORIENTBELL. On behalf of ORIENTBELL, I welcome you all to our Q4 and FY21 earnings conference call. I have with me from the management, Mr. Aditya Gupta, Chief Executive Officer, and Mr. Himanshu Jindal, Chief Financial Officer. We will have brief opening remarks from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ materially from those statements. ORIENTBELL Limited will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I would now hand over the call to Mr. Gupta for his opening remarks. Over to you, sir.
Good afternoon, ladies and gentlemen. This is Aditya Gupta. Once again, a very warm welcome for the earnings call. I hope most of you will be in Bombay. I hope everything is safe today. We also have Himanshu Jindal, our CFO, and of course, Pareto Capital team, our IR advisors on this call. During FY21, OBL has registered a net sales of 500 crores versus 491 crores for FY20, thus growing top line at 2% despite a near washout in Q1 of FY21. The quarter-wise growth during the course of the year showcases the strong recovery by the company once lockdown was withdrawn. We grew 6% in Q2, 21% in Q3, and 43% in Q4. OBL has navigated FY21 with a purposeful focus on business rejuvenation, with new initiatives created to address the unique challenges. The company's efforts on reimagining business processes have helped drive an across-the-board improvement in performance metrics, both financial and customer. Our first focus this year was on safety, with regular sanitization of workplace, manufacturing places, flexible working hour, COVID test and health awareness programs for all our employees. Putting people first and partnering has been our mantra for the year. While many companies were retrenching, ORIENTBELL has hired 220 new employees across various departments in FY21. Salesforce number was also augmented by 10%, and 4 new branches were opened to provide local support to our channel partners and customers. Close to 12,000 plus human hours have been spent last year on learning and development across our manufacturing units, our head office, and the sales team. To help our sales team during these times, an online chatbot service, Sarthi, was launched, which provides 24/7 assistance and query answering service to our sales team. This has helped them a lot while chasing project sales. To make learning a continuous practice, a mobile learning platform, iLearn, has also been launched recently. Over the last 2 years, OBL has strengthened its product portfolio by launching 8 new categories with 500 plus stock keeping units. Products such as pavers, germ-free tiles, both wall and floor, step tiles, 30x45 high gloss germ-free sparkle series, elevation tiles, full body vitrified tiles, and many new designs in GVT were introduced in the last 2 years. The industry first online launch of many of these categories happened in July 2020, which was attended both by our channel partners and our sales team virtually. Our success has been the utilization of the lockdown to re-establish contact with dormant channel partners across India and resolve grievances. This, along with our outreach to new channel partners, has helped the company add or revive 400 plus channel partners who contributed 10% of FY21 revenues. We have also opened 69 new tile boutiques, which is our showrooms. We call them the ORIENTBELL tile boutiques in targeted cities. Mind you, this is the highest number of additions in any year so far. We now have 230 ORIENTBELL tile boutiques across the country. Our efforts towards building a digital-first go-to-market strategy have started paying rich dividends, especially as customer mobility during FY21 was severely constrained. We increased our social media initiatives and internet advertising to drive visibility and brand recall. Last year, we launched 79 videos on social media with a remarkable 5.5 crore views and more than 1 crore likes and shares. ORIENTBELL has also invested in its website to educate customers and help them to make informed purchase decisions. The increasing number of leads generated through the internet is also helping our channel partners sell out faster and building loyalty for OBL. As a recognition of all these groundbreaking work, the company has been awarded various awards: the Best Brand of the Year, the Best Mobile App of the Year, facilitated by Realty Plus, a key publication. With this, I request our CFO, Himanshu Jindal, to give you an update on the financials. Thank you.
Thanks, Aditya. Good afternoon and thanks for joining in. Another very strong quarter for OBL. We were able to grow volumes 37% in top line by 43 during the quarter 4, and thus were able to beat the last full year by 2%. Our EBITDA has also grown by 178%, while our margins consistently stayed in double digits for the second quarter. This was despite the upward movement in input costs and more specifically the significant increase that we have seen in gas cost. For the full year, EBITDA was higher at 37 crores and our full year operating margin was 7.4 versus 6.4 last year. This was despite the washout in quarter 1 and the 8.8 crores EBITDA loss that we reported in the same quarter, when the operations were severely impacted due to the unprecedented lockdown. The better product mix and also increase in prices in the market, along with our continued efforts on eliminating any unnecessary costs, have helped. In fact, if I look at the last 3 normal quarters, cumulatively we have clocked more than 460 crores of top line at an average EBITDA of 10%. Consolidated PBT for the full year too has quadrupled during the last year, while my PAT is also higher at 7.7 crores. On the balance sheet front, we stayed consistent in our approach towards working capital. This is in fact the 3rd quarter in a row where our core cash conversion cycle has stayed in the lower teens, which is 13 days for quarter 4. We still rotate capital 17 times in a year, which in my understanding is the best in the sector. The icing on the cake has been our very consistent cash flow improvement from both core operations and working capital. So we generated 68 crores during the course of the year, and we are now cash positive at the year end. We have also proposed to restore dividends payout this year, and so 5% dividends have been approved by the board and will be put up to the shareholders in the next AGM. Also an update on the modernization capex project that we had announced in January 21. The 0.7 MSM capacity debottlenecking project is running as per schedule, and we do expect completion by mid FY22. I think we can now request the moderator to open the lines for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jay Prakash Maheshwari from Lifeguard Pharmaceuticals. Please go ahead.
Hello.
Yes,
Yes, I can hear you.
My question is, due to COVID second wave, what is the impact on the sales? And in the branding efforts, I can see that a lot has been done in social media, branding through social media, but is TV an option you guys are looking for? Also, what is the mix of retail and institutional demand, as retail demand should come to a standstill due to lockdown right now, or should be impacted? So what is the scenario out there? I just wanted to know.
Thanks, Jay Prakash. First thing first, yes, there is definitely an impact because of the second wave of COVID, and all of us are working from home. All markets are shut down. So there is an impact. How long will this continue, and what is going to be the overall impact on the financial year? The experts are still kind of deliberating that. We don't know. Everything would depend on how fast the spread of the virus kind of slows down. On your second question, Jane, which was digital versus TV, we believe that digital is going to be the mainstay of our advertisements. We are a multi-product company with a large number of sizes and types of tiles. So one size fits all kind of a TV campaign is not something which works for us. So digital will continue to be our mainstay. That's the second thing. Third thing, I didn't get a question exactly. You talked something about retail versus project. Is that the question?
Yeah. That's the question.
Yeah. So it's the same. We do about 60 to 65%. About 2/3 of our sales are retail, and slightly more than 1/3 is projects. And what we have seen is that the bigger projects are, if you're talking of first quarter, which is the current quarter, the bigger projects have been less affected than the retail business. Retail business, because shops and dealers are kind of are shut down, markets are shut down, has been impacted more.
Right. Okay. Thank you.
Yeah. Thank you, yeah. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
Yes, we can hear you.
Yeah, okay. So I just had a couple of questions. I wanted to understand one on the vitrified and the ceramic, the proportions. So vitrified, I guess it has increased from 40 to 41%. So how do you see it? You have launched 8 new products also, categories this year. So how do you see that mix in the next 1 or 2 years? Because that will also have an impact on your realization. So that is my first question. Hello. Yes, was I audible?
If you can repeat the question, please. I think Aditya had some issues, yeah?
Okay, fine.
Yeah. Please.
So I just, the first question was on the vitrified and ceramic mix. So it's like 41% of vitrified, of the total revenue is vitrified tiles. So I just wanted to know, going forward, how do you see this mix in the next 1 or 2 years? Because if your vitrified segment increases, it will have a positive impact on your realizations also. So I just wanted to get your thoughts on that.
Sure. See, for us, you're right. I think our vitrified ratios are obviously where they are. This used to be very bad, let's say 3-4 years back. Post the new line coming in, I think we've been able to see much more traction here. Today we do 41% vitrified. But obviously, this is not in line with what our peers do. So the aspiration is to come close to what our peers do today, which is around 60%. Now, whether this will happen over a short term is very difficult for us to articulate right now. But yes, the aspiration is very clearly there, and we would want to improve on that as well. I think what you should also appreciate is that more than purely vitrified, I think we follow a more of a solution-based approach. So, which means within ceramics also there are products, which are high realization, high contribution margin products for us. So
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉल
Hello.
Yes.
Yeah. So, like I said, there are those other products also which we would want to develop, which we are developing any which way to improve our high value product salience. Yeah. So that would be the philosophy. That is the philosophy, and this is something that we are going to carry on.
Okay. So what will be the contribution, if you could share, the high value products, your total revenues right now?
So we said, this is 41% salience for us.
Okay. So my second question was, right now, the western part of India in your investment presentation only contributes to, I guess, 5% of your revenues. So, any particular plan on increasing, because you have two JVs in Morbi, and plus the western market is also a huge market. So any plans on, expanding in the western part of India?
So definitely, both the markets, whether it's west or south, I think we have a lower penetration here. Yeah, in terms of our total salience is 32% for the full year last year. So these are definitely larger markets, so the idea would be to obviously grow here as well. And there's plenty of opportunity. Yes, so we agree. Yeah.
Okay. Thank you so much, sir, and I wish you all the best. Thank you, sir.
Thank you. The next question is from the line of Devanshu Sampath from US Securities. Please go ahead.
Yeah, hello, sir. Good afternoon. So this is the first time I'm attending a call. So if it's been discussed in the past, I apologize for the same. So just wanted to check one thing with you. The senior management of the company is largely from a non-ceramic tile background. So there's definitely a lot of different takes that you can take. I just wanted to get a sense from you, right from the designing to all the way to manufacturing and selling. Can you please highlight some of the things that we brought new to the industry, and what are we doing different? If you can just help elaborate what is on these parts, basically. Yeah, that's question number one.
Okay, Aditya here. So Sampath, you're right. We have our CXOs drawn in from largely from non-tile background. Some of them are from building construction, some of them are from services, some from FMCG. So it's a very different set of experience which is available today at ORIENTBELL, very different from what other tile companies have. Now, to answer your question specifically, I think I've spoken about it a bit earlier. How are we different and what are we doing differently? What is it that we have kind of brought to the industry? So let me give you examples in the order of activities which you talked about. So right from design of new products and the selection of which product category to launch, there is a huge difference. We are today launching product categories after doing a very detailed market analysis in terms of who is the consumer for that particular product, what is the competition in that product, why would our product sell, how can we differentiate our product vis-a-vis competitors. In terms of designs, we have a very robust process today of crowdsourcing feedback from channel partners before we launch a design. So typically we would come up with say 200 designs, and over a period of 2 months, by sending it out to our channel partners, we will cut it down from 200 odd designs to some 20 odd designs that will finally get launched. That's on the new product cycle. In terms of other things I mentioned in my earlier answer to Jaiprakash Maheshwari also. Hello.
Yeah. Please.
That we are a digital first company, and that is, I think, one huge difference, one huge innovation that ORIENTBELL has brought in to the tile industry. Nobody else in the tile industry actually uses a website or uses various kinds of digital tools the way we do to close sales. The vision that we have decided for ourselves is to make tile buying and selling simpler. And because so many of our CXOs are from outside the tile industry, it kind of resonates with us. And everything that we have done and we are doing continuously makes the job of buying and selling tiles very, very easy for our consumer and our channel partner. So that is again another thing which is unique about ORIENTBELL.
So when it comes to the consumer side, how are you actually communicating this?
So we have the most actively visited website in the tile industry, an absolute number of visitors. So we have 100,000 plus consumers, intending consumers who are going onto our website every month. And through a series of filters, we help them by guiding them, and informing them of what kind of product choices they can make, and basically holding their hands in the purchase journey so as to enable them to find a particular tile or a particular design or a particular solution that they would have in mind. And also the website, I would encourage you, Sampath, to actually go to the website. If you go onto the website, you will find a very large number of tools which can be used by the consumer to, for example, one of the tools, very popular tools, what it does is you upload a photograph of your, say, bedroom to my website through your mobile phone, and you also select a particular tile from the website which you like. So in a jiffy, the tool tells you how that tile, how your room will look with the furniture that you have in the room and everything staying as it is, with the same curtains, the same bed sheets and everything, how that particular room will look with the tiles that you have selected. So there are a host of other such features on the website which are bringing more and more customers there, and going back with a lot of satisfaction and positivity for brand OBL.
Okay, sir, definitely check it out. Can you tell me, sir, if there's been a considerable amount of bookings, or what kind of volumes have you been seeing from this channel in the last, how has it changed over the last year?
So sometimes it's difficult, see, because tile is a very bulky item. It is not something which you can just ship by courier. So the final leg of the fulfillment, the sales fulfillment, happens through the channel partner network.
Okay.
So what we do measure is the number of leads and customer referrals we give to our channel partners. But how many of them get converted into sales? Hard numbers are difficult to come by.
Sure. Got it. Yeah. And so, second question I have is just on the margins versus the other players, right? So, over a 3 to 5 year period, do you think we'll be able to narrow into the maybe not the largest player out there, but the other companies who are ranking, in the listed space, who are ranked second or third? Do you think we can close in on their kind of margins, or you think that because our sourcing is a little different, and our product mix is a bit different, it'll be we still be at a lower margin versus those players also?
So Sampath, margins are a derivative of a lot of things. I think first and foremost, except the market leader, our margins have been similar to those of other players, other listed players in this industry, and there are many versus whom our margins are far superior. So that's one. Secondly, 3 to 5 year perspective you are talking of. As a policy, we kind of don't give out guidelines. But if you were to look at the recent past, you would find an answer to the question in terms of how our margins have behaved in the last, say, 1 or 2 years. Having said that, all the stuff that we are trying to do in terms of opening new showrooms, expanding our channel, expanding our distribution, the new products that are being launched are all targeted to get a better share of the higher profit market.
Sure. Okay, so thank you very much. Wishing you all the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Viral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. Sir, in your presentation, we can see that there has been a line written that there is no major capacity addition during FY21, but there is an announcement of plenty. So if you can share the details, which players have announced this?
Okay, so one of the players had announced in their third quarter, after their third quarter results, that they want to add some 8 to 10 million square meters. I wouldn't want to name them, but that's available in public record. That's one. Secondly, our checks in Morbi tells us that about 80 odd new plants are being talked about, and they are at various stages of planning. Some of them have also kind of placed orders for machinery. So we expect that out of these 80 odd plants, we will start seeing some plants coming up by the end of this calendar year or early next year. In the last 2 years, though, we have not seen any significant capacity addition happening in the industry.
Okay. And so this Morbi, players focusing on the export side. So is it still helping, branded player like us who are focusing mostly on the domestic market? Hello?
Just a second, Hiral. I think, Aditya, are you there?
We've lost the line for Aditya, sir. I would request you to please stay connected while you join him back in the call. Thank you for patiently waiting. We have Aditya Gupta reconnected, so you can go ahead, please.
Mr. Shah, I missed your question. You were talking about capacity addition, and then you were saying something. I missed that. Sorry.
Sir, I was talking about that. In FY21, we have seen that Morbi players have focused on the export side. So is this still helping branded players like us who are focusing mostly on the domestic market?
Yes, definitely. I think the export momentum is likely to continue through this calendar year and the better part of at least next calendar year. It's definitely helping us.
Okay. So this is giving us the pricing power?
A bit of both. A bit of pricing power is better than what it was. The industry in the last fourth quarter has taken some price increases. So that is definitely better than what it has been in the past. That's one. And to some extent, the spare capacity which is available is also getting used up. So it helps everybody.
Okay. So how much price hike we have taken in order to offset even the cost inflation? The gas you talked about?
So we started taking price increases from November of last calendar year. And depending on the product and all, we have taken various price increases at different levels, at different points of time over the last 4 months.
So blended would be how much, sir? 2 to 4% blended average?
Maybe, I guess in that price range.
Okay. And so what is our retail universe presence and how much we have added in last 1 year?
So I said we have added 400 plus new channel partners, which contributed 10% to our business.
And in terms of retail universe, sir?
I think the exact number, Himanshu, was there in the, what was that number? It was I think 2,000 plus or something like that.
Yeah, so the active channel partners for us, is somewhere close to 2,000, and we did add or revive some 400 odd channel partners this year.
Okay. And so the JV volume sales were down in FY21. So any reason behind that, and what is the outlook for FY22?
Himanshu, you'll take that?
See, what do our JVs do? One of them is basically a volatile plant. The other is basically producing soluble salts or DC. Over a period of time, obviously soluble salts is becoming more of a commodity. So is DC. Yeah, we are picking whatever we can to be able to feed to our customers here onshore. Whatever they can on their own sell is also something that they can do, provided they take a buying from me. So we are trying to see whatever is best working for them and for us over a period of time, and then deciding who is supposed to place volumes where. Right. So that's a constant process which is happening.
Okay.
One more thing, Mr. Shah, I'd like to add to that. Soluble salt is, as Himanshu said, total commodity. So we have stopped manufacturing soluble salt in our JV in the last financial year. So that also had an impact on the overall. We have moved to other product categories which we find are more remunerative.
Okay. And so lastly, what is the capex plan for FY22 and maybe FY23?
On the capex plan, we have already announced a modernization of one of our volatile plants in Sikandrabad. That's 9.5 crores. Beyond that also, I think we'll do roughly around 7-8 crores more, at least, in terms of what is going to happen in FY22. The other part that you should appreciate is, yes, we are sitting on cash. I know that is a question that will pop up at some point in time. So we are studying multiple options, whether it's any sort of an option, starting from a brownfield to a greenfield to an M&A. These are on the table, being discussed, apart from whatever sustenance or smaller projects that we run. Once the situation is a little normal, once we are in a position to take a definitive stand on this, we'll come back to you. Yeah.
Okay. Thank you so much, sir. That's it from my side. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity. So my first question is good performance in Q4 and margins in a double digit. So can we expect that most of the fuel price hike was there in the Q4 cost structure?
Very honestly, the way crude is behaving, the way natural gas is behaving, Very difficult to say. We know that, in quarter three, we did have a favorable base out of crude for at least our Secunderabad plant, where the gas prices are basically marked to the average of the last three trailing months of crude. So that effect will obviously move out. So we might get hit in quarter one now. But having said that, I think, what this industry has seen very clearly over the last 4 or 5 months, as Aditya also mentioned about price increases. So, today, or let me say the industry has tasted success. Yeah. They all believe that, yes, price increases are possible. So I don't really see that, the gas prices becoming a constraint, at least in the short term. The margins, see, everything obviously depends on how people play prices in the market. If there is pressure on account of demand, then obviously, there could be a bit of a trade-off between pricing and volumes for now. But otherwise, I think, things are pretty okay at the moment. Huh?
Okay. Second question is, obviously the Q1 will have some impact due to the second wave and the state-wise lockdown. But in the, let's say, medium term, let's say 2-3 years, what kind of volume growth you expect, given we are expanding our own boutiques also and also the channel partners?
Aditya?
Yeah, so Mr. Doshi, I think we have been saying that over the next 3 to 5 years, we expect to be amongst the top 3 companies in the tile industry. That's a 5-year vision for ORIENTBELL, which definitely will come on the back of both top line and bottom line growth.
Okay. And one last question. If I see our current other expenses have gone up sharply, so anything specific or just because of the scale of operation it has moved up?
Other expenses have moved up on account of multiple reasons. Obviously, sales is one very big factor. There are some year-end adjustments which have been done. So, for example, provisions, etc. You would see that more in the cash flows. So I think we want to be prudent at this stage. Yeah. So all of that is there.
Okay. And last question, how many more boutiques we are planning to add this year?
So Mr. Doshi, again, do not want to give out a futuristic number, but we did 69 in 9 months of last year. So you can take a guess on the number there. The thing is, problem is that we will be able to get started again only, I guess, from June, July, not before that. Maybe not even June.
Okay. Thank you. That's it from me.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
First of all, want to congratulate you for excellent working capital management. Sir, but the point remains that our turnover this year as well as last year, any year we take, it is on a declining path since FY16, and if we see our turnover is back to FY12 levels when the merger of Bell Ceramics was made, and our EBITDA is back to pre-Bell merger, 10 years back. So, and if we compare with our peers, then our peers' revenues and EBITDA is 3 to 4 years back at the max. So then what is the reason for this underperformance? And sir, when will we overcome this?
See, what you should appreciate, the board at OBL here made 2 interjections over the last 3-4 years. One was obviously setting up an EGBT line. The other was getting us on board. What really happened, I think last 3-4 years were very, very difficult from the ceramics play point of view. Markets were tough. Yeah, demand was absent because of liquidity. And at the same time, there was a price erosion because of oversupply, and gas costs were also going up. all, if you try and compare us with our peers, I think you would find that all players, big or small, have been impacted. Some more, some less. Yeah, we got impacted more, and there were reasons for it. Starting from the fact that we have been selling more to projects, so our exposure to projects perhaps is more than what others do. You also look at our vitrified ratios versus the others, so the difference there as well. And also our scale. Yeah, the scale is also relatively less as compared to what our peers had. I think what our team here, Aditya, has brought in all of us here on board. All of us have tried to play with the market in a way, understand this industry, play with our strengths, build up initiatives around which all of us are working. And this is what you see now coming up and giving us the kind of results that we want, more importantly in FY21. When you say that, our top line has been lower than the last year's, see, what you are missing is quarter one, right? We lost 80 crores in quarter one alone this time in the last financial year. Had that not been there, even if I were to grow 0% in quarter one, I should have been at 580 for sure, right? Add a few more crores, we could have done 600, which means we were better than FY19-20 also. Yeah, so it's not a YOY. It would have been at least 2 years of growth, consistent growth. This is something which is getting reflected on, if I mention that as part of my opening remarks as well. Last three quarters, which are the normal quarters, is when we have seen growth. 5% or a 7% or a 23% or a 43% now. This is all obviously markets plus us playing together. Yeah, I hope that answers.
Yes, sir. So it does. And sir, also wanted to understand, sir, that since our operating margin also, you answered that in the first answer only, that due to higher project business, non-vitrified business,
yes,
our margins are lower than the peers.
Yes.
So our average selling price, how does it compare with the market leader? I mean, what is the differential between their and our price? And is there any strategy to for convergence of our realization with market leader?
See, the market leader operates very differently. Yeah, there is a whole lot of investments that they have done over a period of time through which they are getting premiums, right? We, in our case, have not invested very heavily into educating markets, in terms of the awareness. We started the journey only after Aditya and all of us came on board, right? So there would be a time lag effect for sure in terms of premiumizations. But what you should appreciate is if you are tracking the other peers who publish volumes, when you look at their ASP trends versus us, I think, if I look at the journey from FY15 onwards, let me say the ASP gaps have narrowed down definitely. So there was, at least a 30 rupee differential which has been narrowed down so far over the last 5-6 years. Yeah. And there are multiple reasons to that. We have held on to our ASPs or increased them a little while the others have actually come down. Yeah. So we have been holding ground through what? Through better conversions, through better HVP, through better vitrified, through better retail. I think all of this is adding up now. And over a period of time, I think, we should be in line with what you see with the others, na?
Okay, sir. Great answer. Best of luck. Thank you very much.
Thank you.
Thank you. The next question is from the line of Devansh P. from SIMPL. Please go ahead.
Yeah. Thanks for the opportunity, sir. So just a couple of questions. One is specifically relating to the cost structure, especially from the side of the gas. One is, can you elaborate on the gas pricing trend over the last 4-5 months for the industrial gas? And second is, how do you see the simplification of GST structure? How much benefit can come from that? And third is in terms of gas exchange. I mean, how do you see that as an opportunity, to streamline our cost structure?
So, Devansh, on the gas pricing per se, see, it works very differently across geographies. It depends on which plant, what gas connection do you have. So, for example, our Secunderabad plant gets gas on the basis of 3-month trailing crude prices. Yeah.
Mm-hmm.
If you look at our hotspot plant, that's a CGD setup. So you do get pricing via the cooling mechanism. If you look at Dora is a APM mechanism. So it's a subsidized gas that we get there. Full air to full air, Dora, there is a saving. But, if you, and the costs have been flattish, yeah, so far. But Secunderabad, with crude going up every single month, the cost has gone up. Yeah, there isn't even at Hotspot for that matter. Yeah, the costs have started going up. From somewhere mid of last year. So from the quarter two lows, which were the actual lows and not the theoretical lows, because quarter one we didn't really produce. Most of us didn't really produce. So from the quarter two lows, if you compare us maybe now, I think Secunderabad is already more than 40% increase. Yeah, in terms of gas cost today. If you look at Hotspot, I think it should be 20-25% up as well. But we still have a fairly good base at Dora. Yeah. More importantly, I think what you should also appreciate, you looked at the WPI numbers today. If something like WPI is going up 10.5%. Yeah. And this is something which is relevant from a manufacturer's perspective. Inflation is moving across in all commodities and everything that we are buying today. Right?
Correct.
Which will then get translated into cost one or let me say pricing one way or another in case we can. Otherwise, that will hit the margins. So this is where gas is. I think your second question was on. Can you repeat that?
The GST structure.
Okay, simplification of GST. Yeah. See, there are talks. Someone did mention earlier from the government bureaucracy. Someone did mention that GST gas would come under GST. Let's see how that happens. GST today, you know what it is, right? For everyone. There is very clearly a VAT which is being imposed by states today. Very different VAT tax structures. So for example, in UP, the VAT would be 10%. In Karnataka, 5.5%. Morbi works very differently. They do get a subsidy on VAT, which is 6%. So there are various facets to it, right?
Correct.
How they rationalize what GST rate comes up finally, we need to see that before we can really articulate as to how it could impact our margins. Nah?
Okay. I think that was really elaborate, sir. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Prudence Wealth. Please go ahead.
Thanks for the opportunity. Congratulations, team, for good results in tough environment. Sir, the new team, you have been here now for almost about 2.5, 3 years, and we have done exceptionally well in terms of various parameters of improving sales, margins, and also in terms of distribution network. So, sir, just to understand, firstly, your strategy now going ahead in next 2 to 3 years. So what is the focus of the top management team in terms of what kind of steps you would like to take or you have taken, and maybe add on to that so that, certain things fall in place, typically like the distribution strategy, the capacity built up, strategy with regards to exports, and finally, strategy with regards to costs or the margin front.
Aditya, would you want to take it up?
Yeah, I was just starting. So thanks, Rahul. I think going forward, we would be doing a lot more of the stuff that we have already talked about, and we have just about got started. So we believe that there is a huge amount of juice to be extracted on all of those initiatives. So what I mean to say is that the headline initiative will not change. So for example, I talked about adding more than 400 new channel partners in FY21. So that push to add newer channel partners to get better distribution and to get better depth in existing channel partners, product-wise depth, is going to continue for the next 3 years. We added 69 new OBTBs, which was almost a 40-50% increase over the number of OBTBs we had in FY20. So more displays, bigger showrooms is going to be a focus area, and it will continue to be pushed for the next 2 to 3 years. You talked about capacity. Himanshu spoke about some 2 different projects which have been sanctioned in the last financial year, which will be up and running in this financial year. As you see, we have cash on our balance sheet. The way we have squeezed our working capital cycles, we now have the capability to invest in further future capacity expansion. So whether it is a brownfield or a greenfield project, we are still working out details. So definitely capacity expansion is something which is there on the next 3 years agenda. One thing which we are and we will continue to be very different from our competitors is this whole focus on digital. Tiles is an extremely complicated category. And for somebody like me who joined the tile industry 3 years back, I would say that it definitely need not be so complicated. But the way the industry has developed their host of sizes, way of talking and everything, I see huge amount of value by just simplifying the whole go-to-market. Right from our production plants to the consumer and then right on to the mason and all. If we can simplify this whole process, we see a huge amount of value which will get added. I briefly spoke about the website, for example. So we get 100,000 visitors on our website today. 2 years back, this number was maybe some 4,000, 5,000 a month. It is gone up to 100,000 a month in maybe 2 years' time, maybe less. That is because the customer is desperate to understand the category better before he or she makes a decision. The current system of channel partners, companies, and celebrity endorsements are in some ways not meeting that need. And we see ourselves with our experience and the head start that we have taken, we see ourselves as being the leaders in this space, and we believe that over the next a few years, this is going to drive our revenue growth faster in the industry.
Sir, in terms of the capacity which we have today and along with the expansions which are going to come coming in this current year, typically at peak utilization, what kind of top line can be generated?
I think that is, we did about in fourth quarter, I think we did about 85-86% of capacity utilization from our own units, and then JVs, I don't remember. But my sense is, now two things. One is that we have one of the, amongst all players, we have one of the highest ratios of in-house manufacturing. Almost 2/3 of our manufacturing, or even actually better than that, almost close to 70% is our own manufacturing plants, and then another 20-25% is from our JVs. So we have a huge capability to grow by sourcing from vendors in Morbi. So I don't see that as a problem. But given the plans that we have today, which are, I think, and our existing JVs and all, a top line of maybe somewhere up to 800 odd crores, Himanshu, correct me if I'm wrong, is something which is doable without changing, without going to Morbi in a big way for outsourcing. If we add outsourcing, grow outsourcing, which is small for us, then the sky is the limit.
Sure. And sir, we have spoken in the presentation with regards to savings in the fixed costs. You mentioned that, you've saved almost, correct me if I'm wrong, I think the number was somewhere around 30% over the quarter 420. So how much of this is something which will continue to be there over next year or so? What is the sustainable savings in the fixed costs which you have done that can continue to be helpful to the company?
A large part of this is sustainable, Rahul. So it's not something which is going away in a hurry. I think you already have our cash flows, etc., which also depict, what else have we booked as part of costs, to be prudent. So, from a fixed cash cost perspective, you're right, we save 30%, and most of it is sustainable.
So that basically means with growing top line, there is a scope for operating leverage for the company to be there.
Absolutely.
Is my assumption right?
Yes, absolutely. Anything which is critical for the business. So, for example, let me say marketing is a very clear priority for us. We want to increase brand awareness. Yeah. Even if we have to say, spend a little bit more or even more. Yeah. I think me and Aditya are aligned, and the board is aligned, more importantly, that we should go ahead and do that. So we are not here to save pennies. We are here to obviously, like you rightly said, work on the operating leverage, try and get more top line for ourselves, and through that, obviously, profitability and cash flows. Now.
And so with regards to marketing, any ballpark figure which you have in your mind, this is the kind of amount or this is the kind of percentage of top line we would ideally like to spend for the growth in the years to come?
See, our peers have been investing much, much more. Yeah. So as compared to what we even do today. Right. So idea would be to try and spend whatever we can. Don't cut down marketing just for the heck of it to save a few crores. So, the idea would be to do at least 2.5-3% year on year, at least that much. Yeah. So, so that's what the run rate should be in normal times.
That is helpful. And sir, given that we have penetrated to a certain extent, and as what you people mentioned, that the strategy continues to, follow that initiative. Any plans to have so-called a brand ambassador, something on those lines? And pardon me if I'm wrong. I've seen your website, but I didn't see any kind of so-called a brand ambassador being seen on the website. So
we have no plans.
Incorrect on that.
So Rahul, we don't have any plans for a brand ambassador as we speak.
Okay. Fair enough. Just last one question. So I'm not asking for a guidance for this year FY22, but what is your so-called vision statement? So 3 years hence, where do we see ORIENTBELL?
So I said, Rahul, another gentleman had asked that. So 3 to 5 years, we expect to be in the top 3 tile manufacturers in the country.
Okay. Fair enough. Thank you so much. Wish you all the best and take care and stay safe.
Thank you. We would request the participants to please limit your questions to 2 per participant. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir. So just wanted to check, would you be comfortable, like any kind of outlook that you want to share for FY22 in terms of volume growth or margins? So that will be quite helpful.
So Deepak, short answer, no.
Okay, no problem. Thank you all the way.
Okay, thank you.
Thank you. The next question is from the line of Vikram Mehta, an individual investor. Please go ahead.
Hi. First of all, compliments on an excellent quarter and sustained turnaround the company this week. First of all, do you see with 80 units in Morbi being commissioned in say January 22, would that again lead to a lot of supply to the domestic market and again put pressure on prices? That's the first question. And second is, you've talked about an aspiration to become a top 3 player in the industry over the next 3 years. I just wanted to know, how do you see Orient being positioned, in the sense that do you see yourself as a premium player? Do you see yourself as a volume player? Do you see yourself focusing on certain market niches? Just wanted your thoughts on that.
Okay. Vikram, I think the first question was for January 22 in terms of capacity addition in calendar year 22. Was that the question?
Yeah, it was about the 80 units you talked about which are coming up in Morbi.
Yes.
Right?
Yeah.
Would that again lead to a situation of excess supply to the domestic market and again start depressing prices and margins?
Okay. So Vikram, bulk of the units, the new units which are coming up, are expected in GVT, which is which is a bit in short supply today because there is a lot of export interest in GVT in that category. So most of these units which are coming up are from a perspective of the export market and not the domestic market. More so because in the last 2 years, Morbi is quite happy with exports. The cash flows are much stronger. Bad debt is 0. And there are a lot of other export incentives and stuff like that. The kind of range which they have to maintain to sell in export in terms of SKU range is much smaller. So overall, Morbi is very happy with exports, and bulk of these units are coming up to cater to the export market. So I don't see an impact on domestic market so much unless something drastic happens and the market crashes or something happens. Then it's a totally different scenario. Your second question was in terms of OBL positioning. So I said 5 years. I think 5 years you want to be the top 3 companies in this industry. And we, in terms of our positioning, I've said this before. Our focus is to become a company to go to for a consumer, whether it is a contractor, a top-line builder, an architect, or even a retail customer like you and me who's renovating his house. We want OBL to be a go-to company for all these customers on the basis of the sheer ease and quality of solutions, tiling solutions which OBL provides. And that is where the whole digital play actually comes into play. You talked about in terms of volume versus value. I think the focus will be on growing our ASP. We would be working on product categories which will narrow the gap between our current average selling price and that of market leaders. So it would definitely not be in the volume this thing. We would be climbing up the the ASP ladder in the next 5 years. And I hope you will see evidence of that with every passing year. Does that answer your...
No, absolutely. And, my compliments to the team on evolving a great digital strategy, which has, helped you in these tough times. Thanks so much for your answers, and God bless. Thank you.
Thanks, Vikram. Thank you. Hello, Aisha?
Yes, sir.
Do we have more questions?
One moment. The next question is from the line of Manoj Shroff from MS Investments. Please go ahead.
Hello, sir. Thank you for the investor interactions, and also congratulations on great financials. I want to ask, are we going to stick to the ceramic tile category, or can we go into other home building categories also?
So Manoj, yes, we can, but that is not an immediate priority for us. We have a lot of other competitors in this industry who have diversified into sanitary ware, into faucets and all. But that is not something which we are looking at in the immediate future.
Right. Thank you so much, sir.
Thanks.
Thank you. The next question is from the line of Achal Lohade from GM Financial. Please go ahead.
Yeah, hi, good evening. Congratulations, first of all, for the great performance. Sorry, I got in between disconnected. So, pardon me if I'm repeating probably the question on the industry. in terms of for FY21, how do you see the domestic growth, has been in terms of volume growth or revenue growth? And on a steady state basis, what kind of industry growth do we look at? I'm, right now just asking about the tiles specifically, sir.
So, Anshul, I think you're talking about FY21, what the growth has been?
Yeah, or decline, whatever it is. Yeah.
So, with 800 units and the way Morbi operates, difficult to get very accurate figures. I'm talking about the domestic market. I'm trying to leave out exports totally. My sense is that in FY21 domestic market, the overall tile consumption would have been lower than FY20. Unfortunately, we are the first player to come out with the FY21 results, so we don't have a comparative. But if I were to go by the 9-month comparative which is available, my sense is that FY21 domestic tile consumption that of FY20.
And could
going
the decline
forward,
be single digit, double digit, in your opinion? I know it's still a guess, but still, the decline will be in single digit or double digit decline?
Single digit. My sense would be single digit.
Right.
Because I also think that in this year the channel has smartly used the time to kind of empty up their godowns and reduce their trade inventories. So I think it would be single digit, definitely not double digit. But we will know better when, I think, over the next 2-3 weeks, a few more tile players come out with the results. We'll have a better fix on this number. Going ahead on FY22, and now I would like to just discount the pandemic impact. We don't know how much it will be, but I think we have seen every single quarter in FY21 becoming much stronger than the earlier quarter. If you see at ORIENTBELL growth figures, we are down from 60% in quarter 1, we are plus 6% in quarter 2, plus 21 in quarter 3, and some 43% in plus 43% in quarter 4. So I think the recovery in the industry per se was robust quarter on quarter last year. But for the second wave, this would have continued so far. So my sense is that once the number of cases subside and people are confident enough to come out and get around about doing their business, this will also be a good year. But the jury is out whether the normalization will start from June or whether it will take more time to happen. Over a 3-year period, I would think that the domestic tile industry will grow strongly at, I would say, a double-digit growth rate. Hello?
We lost the line for the current participant. We move to the next question, which is the line of Keshav Garg from CCIPL. Please go ahead.
Sir, just wanted to ask in the end whether our fourth quarter numbers, is there any exceptionally high numbers, or are these margins and sales base sustainable provided COVID is not there? So because I think Q4 is a seasonally higher quarter, so you think that we can basically expect the same, broadly the same numbers going forward?
So Keshav, Q4, because this is a kind of business, Q4 has always been a very heavy quarter for building and construction industry. So Q1 and Q2 are always lower than Q4 in the industry. So I don't think that trend, and that trend would continue, would have continued even if there was no COVID.
Sure. Sir, and as far as the margins are concerned, 10% you think it's sustainable?
So Keshav, I think I answered that before also. I think a lot will depend on what the crude prices are. We have seen how crude prices have been galloping over the last 2, 3, 4 months. We know that price of petrol has already crossed 100 rupees plus in many, many states. So a lot will depend on this because 40-45% of the cost that we are paying is crude, and there's anyway a lot of inflation there in terms of everything from packaging material to minerals we buy and stuff like that. So as I said before, not comfortable in giving you a EBITDA margin, but we hope that we will. The relative performance with other tile manufacturers, OBL would do well.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions. Due to time constraints, we would also request the participants to please limit your questions to 2 per participant. The next question is from the line of Sarvesh Kodani, an individual investor. Please go ahead.
Yes, sir. Hi. Congrats on the very good set of numbers. Sir, so in the last quarter conference call, you had listed that there are a lot of headwinds, like there are higher institutional sales in quarter 4, the fuel and freight costs are higher, and yet we have been able to sustain the EBITDA margin at good levels. So is this purely pricing led, or is there anything else that we've been able to do?
So Tamesh, one big reason is the overall top line. We did 180 crores in quarter 4. Sequentially, it was I think about 40 crores more than what we did in quarter 3. So a lot of that margin has come from top line. There was also a role played by price increases. As I said earlier, we have started taking price increases from November 2020. Rather than taking one across the board price hike, we went about it judiciously by taking one or two products at a time and pushing them up. So that was also something which helped us.
Right. And sir, you mentioned that you have added 400 channel partners in FY21 and you plan to continue this kind of expansion.
Yes.
So could you list any kind of broad guidelines that you would look at before signing up with a channel partner, or just anything you could share on this aspect?
Yeah, so we do a pretty extensive exercise from the frontline salesperson level, and which kind of then adds up to the branch level and the zone level, where we find out the geographies, the cities that we are weak in, channel partners which are existing there who might be doing business with some competitors or might be building and construction category but not in the tile category. We do a long list of these channel partners. This is something which is actually going on even now when the lockdown is happening. Then these channel partners are visited by our local sales team, their creditworthiness and all is checked out, and their display area that they have for displaying our products and all is checked out. Finally, this shortlist is being met by our branch head, and then we start business with them. We also insist that we start business with a new channel partner only on advance payment, so that we don't take a credit risk. So there is quite an exhaustive process around this, and basis last year's successful experience, the teams are slowly getting better and better at it.
Great, sir. And sir, you mentioned about inflation, and that inflation is creeping up in all kind of costs. So usually what we see in such environment, that players with poor pricing power face a lot of tough times and a lot of challenges. So do you see any concrete any opportunities or any acquisition kind of opportunities in the current environment? Because with the wave 2, we are again seeing some kind of slowdown and input costs are still pretty high, I guess.
So I think Himanshu did mention that we are sitting, if you see our balance sheet, we are sitting on substantial amounts of cash today, something which we have never had the luxury of in the last many years. thanks to what we have, how we have managed our inventories and our, our credit terms to our channel partners. So we are looking at all kinds of opportunities, whether it is brownfield or greenfield, or even to the extent of buying a new company. If a candidate is available, we will definitely look at it. As I said earlier,
thanks, yes.
Yeah, please go ahead.
Yeah, please go on.
I was saying that we talked about our vision to be in the next 5 years, and definitely for that capacity addition is something which is critical to realize that vision.
Yeah, thanks, sir, and all the best.
Thank you.
Hello.
The next question is from the line of Rohit Rathi, an individual investor. Please go ahead. Rohit, your line is in talk mode. You can go ahead, please.
Hi, congratulations on a good set of results. I have two questions. Hello?
Yeah, Rohit, please go ahead.
Yeah, so my first question is, how are our dealer margins compared to our competitors? And my second question is, we are quite bullish on the internet push. So do we do any data analytics on how this is working out for us and how we can monetize further?
Okay, so Rohit, on the first thing, if you were to ask any dealer, he'll tell you that our margins are the worst. So whatever margins you give to a dealer, they are never enough. So my saying, okay, I think if you compare us with a company which has got bigger revenues than us, our dealer margins would be slightly better. If you were to compare us with one of the Morbi players, our dealer margins would be lesser. So we would be somewhere in the middle. Now, on the second piece on internet, yes, we do a lot of measurement, and that is why we have chosen digital marketing. The category that we are in, it's not an impulse purchase, and it's not a repeat purchase category. People don't buy tiles every year or every 3 years. Typically, somebody will be buying tiles, somebody like you and me will be buying tiles once in 10 years. So, it is extremely important that once a person is wanting to buy tiles, that we are present there and we kind of identify that person and then hold his hand as he or she goes along in the buying process, in trying to make up her mind what kind of tiles, which brand to buy, which size to buy, etc., etc. So all of this is possible to do through digital and not so much through TV. So we do measure things at a minute level. We do track, we do generate a lot of leads from our internet marketing. We do track how the customer is behaving. We have a lot of KPIs, not just, I spoke about the number of visitors. We have KPIs around the time the visitor spends on the website, the number of sections that visitor goes to, the tools that are being used by that visitor. So there are a host of KPIs which are available today.
That's good to hear, sir. Thank you. That answers my question.
Thanks. Thanks, Rohit.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Aditya Gupta for closing comments.
Okay, so thanks everybody. Thank you for taking time out for ORIENTBELL, and stay safe and look forward to meeting all of you again 3 months hence. Thanks again.
Thank you. On behalf of ORIENTBELL, that concludes this conference. Thank you for joining us, and you may now disconnect your line.